I'll be talking about the impact of the financial crisis in Africa. I'll be addressing 5 points very quickly within my 10 minutes. The impact channels, the macroeconomic ramifications that we have observed over the last few years and what we might expect. And then I'll go over to the agricultural sector, its exposure and the impact, how we can retrace them right now. And I'll be talking about food consumption and nutrition impacts that are anticipated as we look into the future. And I'll go to concluding remarks. The impact channels are many, and therefore the impact is sometimes very complex to trace. And also can have totally different magnitude in different places and countries. But we can cite the channel around the recession, export demand, what it does in terms of trade and agricultural incomes. Another channel along the liquidity trap, FDI, remittances, trade credit, ag finance. We have a channel along the foreign exchange and fiscal deficit and their ramification regarding agricultural expenditure and investment. And finally, what countries do in reaction to the crisis may amplify or perhaps reduce the impact coming from the crisis. To the macroeconomic implications of the financial crisis, I think that the trends here tell the story. Africa, if you look at the current balance as a share of GDP, did come out of a long time of stagnation and was on its way to quite solid performance at that level. You see how quickly the crisis came down from positive to negative values towards 2009. There is an expectation that the situation may reverse, but the numbers may still be in the red by next year. I haven't seen long-term projections yet, but that's what's being projected for the next year. The fiscal balance, again, same story. Reversal, hopefully, by 2010, but still in the red. Inflation, on the other hand, has been stable, and I think this is the double crisis which are some way canceling each other out. You remember we started with a very strong rise in food prices, and then the economic crisis that dampened demand on global markets and therefore kept the price increase in check. The funding flows, however, I was surprised to see that despite the crisis, the trend upward may be sustained in the longer run. Of course, these are overall private financial flows, not just agriculture. The natural resources sectors, of course, do play a big role there. We often talk about remittances and how important they are in the crisis. Africa seems to be the region that is the least exposed in terms of the overall level of remittances going into the economies. But also it looks like up to now, the remittances going into Africa have been sheltered better than remittances going to, say, Europe and Central Asia and South America, or for that matter, going to Latin America. The impact on growth, all of these things at the macro level, of course, do affect the gross performance of Africa. Ross was just referring to the remarkable recovery that's been going on in Africa over the last 10 to 15 years, with growth rate that bursts above world average. And measured to the developing country, low-income countries, the growth rate in Africa were comparable at par or sometimes higher. The crisis, of course, hit, bringing growth rates from the 5 to 6% range to about the 2% range. If the IMF is correct, the growth rate will start going up again towards 4% and hopefully higher beyond next year. But let's talk about agriculture more concretely. The first line of channel of influence we talked about, dealing with the recession, demand and export and so on, you can somehow relate to the exposure of agriculture. And here I'm using just as an indicator of the vulnerability, which is the degree of openness of the agricultural sector, how far agriculture is reliant upon or interlinked with the global markets. And the most vulnerable would be, of course, the Caribbean countries with a ratio of almost 7. Africa is around the same level as South America, Latin America 1.4, the highest country, all the way to about 2.2 for the lowest country in terms of degree of openness, measured as the ratio of import plus export divided by agricultural GDP. So Africa is certainly exposed to what happens in the global agricultural markets. We often link the financial crisis to ODA, and then we will link ODA to growth in Africa. The story we've seen here is that it depends on really what's happening in the countries. You look at the 4 decades we have here, the relationship is not stable. In the 70s, when we had a better macroeconomic environment in Africa, the impact was, I guess, more positive. When the macroeconomic environment deteriorated, the policy environment, we all remember what preceded the structural adjustment policies, and during those times, the macroeconomic environment was not so very conducive, so aid had a little less impact, and certainly in the 90s, it looks like, however, in the 2000s, the relationship was getting back to being more positive. So the impact of the crisis, should it be sustained, and what it does to ODA and therefore to growth in Africa is probably something to come in the future, not necessarily now. But when the economic conditions are turning around in Africa and the capacity to provide ODA goes down, I think the impact is going to be more than what we can measure right now. FDI in agriculture, we often link FDI to non-agriculture, but the relationship is there and it's strong. Agriculture is being more and more reliant on FDI in Africa. And I think that the wave of land-based FDI that we've seen recently may just amplify that in the future. We try to estimate elasticities of agricultural growth with respect to FDI. The negative numbers are for Madagascar and Mauritius. They're not significant. I also should say that for about half of the countries, the coefficients were not significant. But the magnitude around 0.5% or so, 0.05, that magnitude on average is similar to what other places have come up with agricultural elasticity with respect, agricultural growth elasticity with respect to FDI. So FDI does have an impact on agricultural growth in Africa. The financial crisis, the first channel, demand and recession and how it affects prices. We have seen this here, and these pictures are known. What I found interesting is that if you look at the price trends for all commodities, and you look at the price trend for African agricultural exports, the recovery on that front is higher than on the overall price index. I had another graph on the food price index, which is an interesting story for Africa. The food prices are recovering slower than the export prices, which should be actually a good story for Africa, should that be sustained and maintained. I should have mentioned at the beginning that I'm presenting here work that several divisions at IFPRI have contributed, and the next bottom 2 slide are work that our trade and markets division have contributed. They're looking here at the impact of trade finance. We often assume that African countries are not very much integrated into the global financial market, and therefore the financial implications may be less. Here in this work, what my colleagues did is to look at the base run of the crisis. If we would not factor in trade finance, what it would do to overall exports in Africa. And if we assume trade restrictions that are similar to what we observed over the last few years, or if we would assume much stronger trade finance restriction. In these 2 cases, we see that exports overall from African countries will suffer greatly from restricted access to trade finance. You look at agriculture, it is the same thing. Although in both cases, it is the trend which is going upward that is being lowered, basically. In all these cases, overall trade export as well as agricultural exports, trade finance will lower the growth rate in the future. So Africa has been impacted, and I think that the channels are now more numerous than we would assume. we were always linking this to recession and demand and prices on export markets. Now we know it works via FDI. We know it works via ODA, and will do so more in the future. We also know that it works via trade finance. Trade finance restriction, due to the impact on exports, have an impact here on overall economic growth. Again, here the colleagues have looked at the impact of the crisis without trade finance restriction, which are the yellowish bars, and with finance restriction in the strongest, with the strongest impact. And you have here reduction in overall GDP growth of up to 0.5 percentage point, which is about 20% of a percentage point more than what you would have under the baseline and just the crisis without trade restriction. This is overall growth, and the same thing you have here in agriculture as well. What transpires here, and what I find interesting, we had it in the 1998 crisis in Asia. Agriculture seemed to be much more resilient than industry in terms of at least reacting to the crisis. The final two slides here look at the crisis and how it affects per capita calorie intake, and the next one is going to be on malnourishment. This work has been contributed by colleagues from the Environment and Production Technology. We all know that with the food crisis and the developments in food markets, there were long-term projections that were made by IFPRI on how far food prices will climb over the next 20, 25 years. So what has been computed here is how the crisis is affecting now the price dynamics compared to the baseline, what would have taken place without the crisis. And they're looking at specific groups of countries and assuming the same reduction in GDP over the last 3 years taking place over the next 20 years. And the outcome is that if we just look at the reduction of growth in developed countries, which would reduce, of course, demand overall for food commodities and therefore slow down the rise in prices, per capita intake will go up compared to the baseline where we would have had the initially projected rise in food prices. So it reduces basically the impact and slow down the growth of food prices. The BRICS are in the same category. If the developing countries, however, do continue to grow slowly as they did over the last 3 years, of course, that will increase malnutrition because per capita calorie intake will go down. So what I would take as a message from this table is that we have a bound, the upper bound and the lower bound in terms of the impact on calorie intake, depending on where the slowdown in growth takes place. It's going to be part of everything. We know the developed countries will grow somewhat slower, the BRICS, and the developing countries in general. But the scenario, the world recession engine, if it continues over the next 10, 20 years, then we are bound to see increases in per capita calorie intake in all African regions. The same in terms of the number of malnourished children. If you have a recession and slower growth in the developed countries, it reduces the pace of price increases and therefore reduces the pace of malnutrition. Slower growth in developing countries, that's the opposite. If the recession, however, continues on average worldwide, the growth rate of malnourished numbers of people will increase, as the numbers show here. In conclusion, agriculture and African economies in general have a broad exposure to the crisis, not just related to demand, but the FDI, trade finance, and ODA changes. The macroeconomic implications were certainly very serious, as we've seen, deterioration of balance of trade, inflation, and fiscal balances, and so on and so forth. It has diminished the pace of the recent recovery, the longest sustained recovery in African history since the 60s. Therefore, we are very hopeful that the turnaround that the IMF is projecting does take place. Africa continues to grow above world average. It has started doing so in the early 20s. We all know in the 80s and 70s, certainly 80s and 90s, that was not the case. Agriculture seems to be more resilient than industry, and hopefully the worst is over, and we're looking forward to a strong recovery in the years to come. The potential consumption and nutrition effect will, however, be serious if the crisis should be sustained. Thank you, Yaki.